let's fast forward a little bit now to technology and the solutions that you provide and the benefits of Eris and connectivity and connecting to counterparties for you, connecting to other venues, whether it's to build aggregation tools. What does Eris do, and what do you see as the future landscape?
Eris, as a traditional futures exchange, relies on open APIs using FIX that existing independent software vendors who offer futures exchange connectivity can connect into. Our primary data center is at 350 East Cermak in Chicago, the Equinix facility. So it offers efficient connectivity for people who already have infrastructure in the Chicagoland area, both for trading the Eris market and then for trading other markets against the Eris market. But almost by definition, interest rate futures markets are traded against a variety of other instruments, and so connectivity is essential. Being a futures exchange also sort of enables the futures model to be used by clients wherein they can do direct execution themselves, or they can rely on agency execution. For years in the futures world, clients have used execution brokers to perform execution for them, and we've seen an emergence in the swap world and in the futures world of aggregation tools, wherein an execution broker is offering their clients a screen that shows the relevant prices on a variety of different markets for comparable instruments like swaps and swap futures. One example of that is the UBS Neo platform, which has recently added streaming quotes for Eris to their Neo platform, and really allows the end user to be insulated from some of the individual connectivity that needs to occur for them to connect to everything, and even have some of the advantages of agency execution with anonymity at times.
Well, why don't we move on to risk? So tell me about the risks compared to trading a swap futures versus an OTC future. Is there any major difference on risk?
The beauty of the Eris Swap future is that it's constructed to replicate the economics of an OTC swap. In this case, rather than highlighting the differences, we actually highlight how similar it is. Eris has a patent pending methodology which allows Eris as a future to Eris futures as futures to capture the economics of a swap and to pay it through variation margin, the way futures pay and collect on a daily basis through a central counterparty. Right down not only with the familiar cash flows of collateral or fixed and floating payments, but even the interest that accrues on variation margin in a normal OTC swap or that's paid through what's called price alignment interest, or PAI, in a cleared swap world. And so combining that feature of the Eris contract with the fact that CME clearing actually settles the Eris contract to the OTC swap curves, the 3-month LIBOR and OIS curves, the result is that the Eris futures pay out the economics of a swap, down to the dollar, but allow futures execution, allow futures agency brokerage relationships, futures order types in an all-to-all market with sensible block trade thresholds on top of that.
Now let's talk a little bit more about international. Are your instruments, I presume, are traded by multinationals? You're probably traded by other firms outside the U.S. as well. What do you see as far as what's your current client base look like as far as whether domestic, international, and what's the mix as far as the users are concerned, and then where do you see this growth proceeding?
Yeah, our primary market right now is the U.S. dollar-denominated interest rate swap futures here in the U.S. The potential in that market alone is enormous, and that's where our current focus is. Most of the early adopters have come from traditional traders of U.S. interest rate swaps, whether that be dealer banks, alternative liquidity providers who are now being given access to what amounts to the swap market, and in this case the swap futures market, for the first time, and then end user clients, usually hedge funds, asset managers, but increasingly corporates, insurance companies, even folks who traditionally have been held out of the futures market because they were looking for hedge accounting, have been using our Eris flexes in order to achieve that treatment. Internationally, usually the most forward-leaning international companies are in Europe and fit into the hedge fund or asset manager category. And so as a US-based futures exchange, we just need all international participation to be intermediated by a US-based clearing firm. And so we welcome international participation. When it comes to expanding the product set beyond the current futures, U.S. dollar denominated interest rate swap futures. We are eager to look for ways to expand into other jurisdictions within rates. So particularly euro-denominated, British pound-denominated probably make the most sense to come next, as well as potentially into other asset classes. The intellectual property that Eris has around futurizing swaps is not unique to interest rate swaps, and we look forward to other applications. So I think throughout the summer and in Q3 here, you'll see some interesting announcements from Eris Exchange.
Okay. So let me ask you this then: as far as the growth in swap execution facilities, if central limit order books continue to form and end up growing, do you see that helping you or hurting you, or do you see any sort of trajectory arbitrage between your futures and the OTC side as it forms?
Mm-hmm. I think that's been one of the biggest surprises for us as we've seen the advancement of swap execution facilities is just how few swap execution facilities feature an active, functional, liquid, deep central limit order book. It's actually mandated under the CFTC rules for CEFs to offer central limit order books, but what we're finding is that some of the most prominent CEFs are subtly, or sometimes not so subtly, steering the business to remain in the RFQ methodology. We actually welcome the emergence of central limit order books. The Chicago style of trading in futures exchanges has always welcomed sort of a level playing field where you let the best price win and you let traders trade on their trading ability, not necessarily on previous relationships. And the more central limit order books that are out there for end users to stack up against the liquidity in the Eris platform, the more we think they'll be pleasantly surprised with the tight markets, the deep markets that they're seeing in Eris standard swap futures, based on the fact that we already have a number of banks and alternative liquidity providers making markets that are observable on Bloomberg and on the Eris Futures website for people to see.
Interesting. So fast forward, the other day I had read that Citadel is going to begin to make prices in the OTC space. Presuming that they are an electronic market maker, do you have that kind of those guys making, not necessarily Citadel per se, but do you have guys who are electronic market makers making markets in Eris, and how is the pricing, and because I kind of see them as being the impetus to central limit order book formation on a CEF. Until we can get to that level, we're probably not going to see a major increase, as you said, in the RFQ. We're going to see RFQ and not as fast a progression as central limit order book unless they can make prices, clear their trades. I'm just curious on the swap futures exchange market, like how that mixes. Is it more the institutional client? Is it institutional banging up against market makers or interdealer brokers, or as far as the player mix of the liquidity, how do you see it forming?
Eris Exchange was formed by proprietary trading firms, sort of Citadel's ilk. So our founding market makers like DRW, Getco, Nico, Chicago Trading Company, are all firms that are sort of well established in the interest rate futures market, and some that have even been participating in the swaps market for quite some time, and certainly favor central limit order book method of execution. We continue to work with other proprietary trading firms like Citadel who are interested in taking advantage of the market structure changes in the swap market in order to play a more prominent role in making markets. And what they're increasingly finding is that in order to participate in a central limit order book, they need to find a CEF or a futures exchange that actually embraces the central limit order book. And so we're happy to welcome them to Eris Exchange. The reality of where we are today is sort of a combination of large institutions like Morgan Stanley is a public supporter of Eris Exchange, streams prices in the central limit order book and also accepts calls for block trades. In addition to like Wells Fargo publicly has announced that they're supporting block trade market making through Eris Exchange, combined with some of the founding firms, create sort of a nice diversity of market makers, allowing the other side of the trade, the buy side, to come in and trade sort of in smaller size to with sort of interesting strategies against Eurodollars and other futures, and then also allows more traditional swap end users to execute larger trades in order to hedge a bond issuance or just take a directional position.
Got it. Interesting. So it sounds like Eris has a pretty big future ahead of it and lots of opportunities, whether it's domestic, new instruments, international. I'm happy you were able to spend the time in this interview, and I wish you all the best luck.
Thank you.